A global real estate funds management firm, Agincourt Capital, has today launched the world's first renminbi-secured convertible offshore bond fund for Australian real estate. For more on this, we're joined by Craig Turnbull, CEO at Agincourt Capital. Will give us some colour around this product, Craig. Talk us through it.
Well, as you said to Karen, it's a world first. We realise that the renminbi deposits building up in Hong Kong are in the order of $80 billion US, and they're earning less than 1% on their coupons. So Agincourt Capital has provided a product which gives investors a way to get a much higher coupon initially, which would be 4%, and the investors will be able to convert that into our Australian property fund, which will invest in office buildings and also residential and development products throughout Australia.
So is this another way to play the China growth story that many people think is playing out through Australian mining, which is spreading this wealth effect and lifting real estate in Australia?
I think, Karen, any investor, whether they're Chinese, Hong Kong or international, if they believe in the China story, they've also got to believe in Australia. China is now Australia's biggest trading partner, and our economies are ever more linked. The mining and oil and gas is very strong right now in Australia, and because of that, the economy also is very strong. This has brought about a great increase in demand for office and residential properties in the country, and this provides opportunity for international investors. Recently, the Australian government also has recognised this and is looking to encourage overseas investors by new special tax rates, which Agincourt Capital will be able to take advantage of through our trust structure.
Well, something that has been an issue for Chinese investors of late is the strength of the Australian dollar. Talk us about the currency risk involved in this product, because it seems as though the investment could go either way. The strengthening yuan is also something that investors have to contend with too.
It's a good point. There is obviously in any cross-border transaction some currency risk. However, our studies have shown us that because of the way that the Australian economy and the China economy is linked, that the Australian dollar and the yuan or renminbi is also tracking quite closely together. In fact, actually, Karen, over the last year, the Australian dollar has improved against the yuan. There is some thought that the yuan may strengthen a little bit in the future. But bottom line is we think that both currencies will track quite closely together given the economic ties.
Talk to us about the appetite out there for Australian-style products, because I noticed you moved from Australia to Hong Kong. You're seeking to raise about $500 million. What's the appetite been like out there?
Karen, we've been stunned by the excitement shown by banks who we've been talking to investors, high net worth individuals and family offices. They're all quite taken with the whole idea of a secured bond initially, and the ability to change it into property into Australia. Australia is seen as an economy that is very safe, and it's seen as transparent, it's seen as growth, and there are many Asian investors who are quite comfortable with Australia as an investment destination. So I think the combination of offering investors the choice of starting into this investment with a bond, with the ability to convert later as they see the fund prove itself, I think is rather unique as well. And the other thing that's unique about this is the bond is secured. There have been RMB bonds issued over the last 12 months to 2 years, but not one of them, Karen, has ever been secured. In this case, the underlying real estate, that is the office buildings that we're going to be buying, will be offered as security for the bondholder, so that's quite unique.
I want to delve into the perspective too a little bit more on Australian property, because what strikes me about the timing of this deal, even though it has been a little bit delayed, it comes as investors have question marks in their minds about Chinese development, Chinese property, and we know that a lot of Chinese developers have been issuing these types of bonds as well. So is this the reason why you're coming to market, because you think the story around a property in Australia, commercial property, is more compelling than Chinese property at this stage?
Well, we think it's a different proposition, no more compelling or less compelling. It is different. It's external to China. There are a lot of Chinese investors who are actually looking to diversify their investments, Karen, and to look outside of China for investments. There is some concern about a bubble in China, but I think those who say that probably haven't spent a lot of time in China. I have recently, and I can see what's happening there. And in Australia, over the last 3 to 4 years since the GFC, there's been a lack of new supply of office buildings around the country. Now, the upside for that, for our investors, is that the demand has significantly increased. Now, what that means is rents are starting to move up at this time, and that means yields tighten. Now, if yields tighten, that means prices start to move up. So for us arriving back into Australia with our fund closed, our 500 million Australian dollars, it means we'll be able to buy much better than local buyers who are struggling to get finance from banks at the moment, since they're so tight with their liquidity. So I think, Karen, that timing for this Australian play is very, very sound.
Well, Craig, we appreciate you stopping by today. We better send you on your way to talk about dim sum bonds. You've got a busy day and good luck with the launch. Craig Turnbull, CEO at Agincourt Capital.